Welcome to the Virginia Workers' Compensation Commission's presentation on a general overview of our EDI program. On the agenda, we will cover Virginia's EDI program, FROI and SHROI reporting, duplicate JCNs and the consolidation process, resources, challenges, compliance, and then we will conclude. Our first topic is Virginia's EDI program. What is EDI? It is the electronic exchange of data from one entity to another. Specific to workers' compensation, it is the exchange of claims data from a claims administrator to the Commission. It provides accident information, party information, disability periods, and payment information for both medical indemnity. A claim administrator can be the third-party administrator, self-administered insurance carrier, or a self-insured, self-administered employer. What is EDI used for in Virginia? EDI populates the Commission's claim processing system, generates notices, for example, the notification of injury, employer name change, or indemnity payment advisory. EDI provides better data quality. When the Commission decided to implement EDI, the decision was made that the claim administrator would own the data. This means that we are not able to change the data here at the Commission once EDI has been submitted, with the exception of the claimant's address. The thought process behind this is the claim administrator typed it, submitted it, therefore they should own it. It also meant we would have more up-to-date information as they interact with the claimants more. This is why you get the correction required letters. EDI helps monitor payments and timely reporting. EDI also helps with statistical reporting. We are able to provide annual reports such as report cards, reports that detail how many FROIs or SHROIs were received, or how many transactions were accepted and rejected in a period of time. VWC's EDI history. October 1st, 2008, we implemented EDI for the first time with Release 3.0 for all injuries on or after October 1st, 2008, with a full all claims mandate on July 1st, 2009. Regulation 16 of the Virginia Administrative Code 30-91-20 allows us to require EDI, and Section 65.2-902 allows us to make those required reports and to find and prepare to file those required reports. July of 2012, we had an all-accident mandate for all open and active claims, regardless of date of injury. Release 3.1 will go live January 16, 2025 for all open and active claims, regardless of the date of injury. What is a legacy claim? A legacy claim is any claim where the date the claim administrator had knowledge of the injury is prior to January 16, 2025. If the claim was previously reported in Release 3.0 and a JCN has been assigned, a FROI UR is required to set the picture for Release 3.1 reporting. If any benefits were previously reported in Release 3.0, a SHROI UR will be expected in Release 3.1 where the previously reported benefits should be present. If the claim was not previously reported in Release 3.0 and no JCN has been assigned, or the claim was created by the Commission and the requested FROI has not yet been filed, the appropriate initial FROI should be submitted in Release 3.1. This chart shows Virginia's acceptable FROI MTCs. Paper is not required to accompany any of the EDI FROI transactions. Two MTCs we would like to point out are the FROI AQ and FROI AU, for when a new claim administrator is acquiring the claim. The FROI AQ is used when EDI was previously submitted on a claim, where the FROI AU is used when EDI has not been previously submitted on the claim. This chart shows Virginia's acceptable SHROI MTCs. Agreement and termination forms are required in addition to the SHROI transactions for all MTCs except the SHROI 02, 04, QT, and NT. This chart shows the acceptable benefit type codes in Virginia. Here's the first half that covers acceptable 0, 100, and 200 series codes. A few codes we would like to point out are 240. This code should only be used when the employer has paid salary in lieu of compensation and the specific benefit type or benefit period is unknown. If the period is unknown, the initial date disability began should be used for the start date and the initial return to work date should be used for the through date. 030 and 090. 030 is for PPD that does not include disfigurement, and 090 is for PPD that does include disfigurement. Here is the second half that covers acceptable 500 series codes. These codes are used to report an awarded lump sum and/or compromise settlement. They should only be used when the Commission has awarded a lump sum or the claim has settled. Here are some hints when it comes to reporting benefit type codes. Any BTC beginning with a 0 means it was paid by the claim administrator. If it begins with a 2, it means it was paid by the employer. If it begins with a 5, it means it was a lump sum payment or a compromise settlement. The only times you should use codes 530 and 590 for permanent partial payments is when you are settling just the PPD benefits or when you are paying an awarded lump sum PPD payment with a 4% discount. Most compromise settlements will be reported with code 500 because they are full and final settlements where no specific indemnity is settled. 501 can only be used on its own in cases where only medicals have settled and can be used in conjunction with 500 when part of the settlement goes towards medicals. This chart shows Virginia's acceptable other benefit type codes. A few codes we would like to point out are 340, which should only be used when reporting claimant's attorney fees that were not deducted from compensation. 430 and 440, they are used in cases of acquisitions and sum up the total of indemnity and/or medicals paid by the prior claim administrator. Virginia only accepts 2 adjustment codes, B for subrogation to show the reduced amount in weekly payment for recovery from a third-party injury. This code would be used for claims that were settled by a third party and a third-party order was issued by the Commission where credit was issued and benefits are being paid during the credit period, not where the claim has been settled by a full and final settlement. And 1 for cost of living adjustment to show the increased weekly payment amount for cost of living. We also only accept 1 redistribution code, code K. It should be used where the claimant's attorney fees were deducted from the claimant's compensation, except in cases where it was deducted from an awarded lump sum or compromise settlement. We will discuss that reporting in a later slide. Virginia will only accept 3 reduced benefit amount codes. S for claims settled under another date of injury, to show multiple dates of injury were settled and the settlement amount was paid under a different date of injury. N for no money settlement, to show the claim has been settled and no money is being paid as part of workers' compensation. An example would be third-party settlements. And D for decrease in indemnity, to show paid indemnity has been fully or partially reduced from the benefit type amount paid that was previously reported. For non-consecutive period codes, we will accept all 3 codes, W for waiting period, B for benefit period, and A for adjustment, credit, and redistribution. The benefit segment. It must include the benefit type code, which will be one of the BTCs accepted by Virginia. This segment must include all benefit types ever paid on the claim. The MTC, which will be the MTC you are filing, but should be omitted when you are submitting a Shorey QT, UR, or PY. Gross weekly amount will report the weekly benefit amount. Gross weekly amount effective date will report when the gross weekly amount became effective. The benefit period start date would be the first day the BTC was ever paid. The exception to this is when you are reporting a Shorey RB, ER, or CB. For these MTCs, the date is the reinstatement date for the benefit type code. The benefit period through date is the last day the BTC was ever paid. Benefit type claim weeks and days is the total weeks and days the BTC was paid. This figure should always be cumulative. The benefit type amount paid is the total amount paid for the BTC, and again, this should be a cumulative figure. Last is the benefit payment issue date. This is the date the check was issued and is required on the Shorey IP, AP, AB, CA, RB, SX, PY, or corresponding O2. If a previously paid and reported benefit is missing or a cumulative figure is not reported on each transaction, the variance order could be issued due to possible underpayment, an indemnity payment advisory may be generated, or a missing BTC letter could be issued. The payment segment. It must include the payment reason code. This is one of the acceptable 500 codes representing the lump sum settlement payment. The payee. This is the name of the individual receiving the payment. The payment amount. This is the amount paid for the payment reason code. The payment covers period start date is the start date for the payment reason code. The payment covers period through date is the end date for the payment reason code. The last is the payment issue date. This is the date the check was issued. Now let's review FROI and SHROI reporting. FROI Reporting 101. An initiating FROI is the first transaction submitted to establish a claim or new claim administrator via EDI. A JCN is established by the acceptance of an initiating FROI and will trigger the notification of injury to all parties, or the claim shell process that triggers the notification of injury request for FROI. Timeliness of an initiating FROI is determined by the date the claim administrator had knowledge of the injury. Minor injuries are due within 30 days and major injuries are due within 10 days. The injury severity type code indicates minor or major claims. M would be used for minor and J would be used for major claims, or if the medical threshold is met. Major claim versus minor claim. An injury is considered major when lost time or partial disability exceeds 7 days, medical expenses exceed $1,000, any denial of compensability, any disputed issues, an accident that results in death, any permanent disability or disfigurement, and any specific requests made by the Commission. A minor injury is an injury that meets none of the above criteria. Initial FROI transactions. The FROI UR is used to transition a Release 3.0 claim to Release 3.1 and is to be filed immediately upon the claim administrator's knowledge of the event. The FROI 00 is used to report major and minor claims. As previously mentioned, major claims must be filed within 10 days of the claim administrator's knowledge of the injury, and minor claims must be filed within 30 days of the claim administrator's knowledge of the injury. The FROI 04 creates a claim and denies it at the same time. If benefits are paid after the FROI 04 is submitted, a FROI 00 must be submitted prior to filing the SHROI transactions. The FROI 04 is considered to be a major injury and must be filed within 10 days of the date the claim administrator's decision to fully deny the claim. The FROI AQ and AU are for acquired claims. The AU is used when no previous EDI has been submitted and must be submitted within 30 days of the effective date of acquisition. A FROI AQ is used when EDI has previously been submitted by the prior claim administrator and must be submitted within 10 days of the effective date of acquisition. The FROI 02 change. It must be filed immediately upon the claim administrator's knowledge of the event. It is used to make changes to FROI-specific data. It cannot be the first transaction on a claim. Any data element being added, updated, removed, or deleted must be accompanied with the change reason code and must be in the change segment in order to update the Commission's system. If a change is not noted in the change segment, the change will be ignored and the Commission's system will not be updated. Previously reported data elements are mandatory for this transaction, with the exception of data elements noted as removed in the change segment. Only one matched data element can be changed at a time, with the exception of the claimant's first and last name or the employer FIN and claim administrator FIN. These can be updated at the same time. Per the IIBC, the claim administrator system should be able to accommodate the full 15-byte character limitation for the claimant's middle name. If the full middle name is known, it must be reported in the claimant's middle name field. Correction to data needed after consolidation. If you are requested to file the FROI 01 followed by the initiating FROI, include the corrected data on the initiating FROI. If the claim needs to be acquired, file the FROI AQ with the incorrect information, followed by the FROI 02 to update the information. It is important to note this, as the only thing a FROI AQ will update is the claim administrator information, insurance carrier information, and any data element noted as H on the 02 and is applicable on the AQ. A few things to note about the FROI 02 is the claim administrator FIN can only be updated when the claim administrators are in the same group, not in cases of acquisitions. Groups are established by the claim administrator section of the electronic trading partner profile, And lastly, if you get an error message or it is not viewable in web file, reach out to EDI support for assistance. 401 cancellation. It must be filed immediately upon request or approval by the Commission. A claim must remain active in the Commission's system if there's a claim form on file. There are only two cancel reason codes acceptable: D for duplicate combined claim, which data element, jurisdiction claim number related, will be required to provide us the related JCN, and J for jurisdiction wrong or changed. A FROI or SROI denial for wrong jurisdiction may be required instead if the claimant has filed a claim in Virginia. Problems caused by improperly filing the 401 are: it renders the JCN invalid. EDI transactions do not move from JCN to JCN, which means all required EDI FROIs and SROIs will need to be resubmitted, and awards have to be vacated and or moved. A 401 does not cancel a previously submitted transaction, but the claim in its entirety. Denial transactions must be filed within 10 days from the date of the claim administrator's decision to fully deny the claim. A 404 is used when the insurer is denying that incident is work-related, no lost time has occurred, no medical treatment has occurred, and no indemnity benefits have been paid on the claim. It also serves the dual purpose of concurrently reporting a new claim while denying it in its entirety. The 404 is used if the entire claim is being denied after any FROI or any SROI has been filed. SROI Reporting 101. A 400 must be on file. The injury severity type code on the SROI must reflect major. SROIs are filed based on what is paid and by whom, but in a particular sequence. Initial SROI transactions. The SROI IP is used to report the initial payment by the claim administrator and must be filed within 10 days upon issuance of payment. The SROI EP is used to report the initial payment by the employer and must be filed within 10 days upon claim administrator's notification. The SROI AP is used to report the initial payment by the acquiring claim administrator and must be filed within 10 days upon issuance of payment. The SROI UR is used to transition a Release 3.0 EDI claim to Release 3.1 and must be filed immediately upon the claim administrator's knowledge of the event. Suspensions. The SROI SX is a full suspension used when a benefit type is no longer ongoing or when a benefit type changes and there's a gap in time. It must be filed within 10 days of the suspension effective date. The SROI PX is a partial suspension used when concurrent benefits are no longer ongoing. Only temporary partial and permanent partial benefits can be paid concurrently and must be filed within 10 days of the suspension effective date. The SROI AC is filed in response to acquisition status code returned on the SROI AU or AQ acceptance acknowledgement and must be filed within 10 days upon receiving acquisition status code B on the SROI AU or AQ. Change and reinstatement transactions. The SROI CB is used when a benefit type changes and there is no gap in time. It must be filed within 10 days of the benefit payment issue date. The SROI CB is used when a concurrent benefit type is being added or reinstated. The transaction must be filed within 10 days of the benefit payment issue date of the benefit being added or reinstated. The SROI CA is used when the gross weekly amount has changed due to the claimant's earnings while being paid temporary partial benefits. It must be filed within 10 days of the change in gross weekly amount effective date. The SROI 02 is used to make changes to SROI-specific data and cannot be the first transaction on a claim. The transaction must be filed immediately upon the claim administrator's knowledge of the event. The SROI RB and ER are used when benefits continue after a gap in time, to reinstate any benefit previously paid and stopped, or a new benefit after a full suspension. The SROI RB must be filed within 10 days of the benefit payment issue date, while the SROI ER must be filed within 10 days of the claim administrator's notification of the payment. Next, we have the SROI PY for payment report. It must be filed within 10 days of issuance of the payment, and there are only 3 reasons a SROI PY should be filed. It is the first payment of medical benefits in a medical-only claim, reporting an awarded lump sum PPD payment with a 4% discount, or reporting a compromised settlement payment. When reporting a lump sum or compromised settlement payment, there must be a matching benefit type code in the benefit and payment segments. It is acceptable to have more than one payment segment with the same payment reason code, and if indemnity is being paid and has stopped due to the settlement of the claim, a SHRAE-X must be filed prior to the filing of the SHRAE-PY to report the settlement. Voluntarily paid lump sum settlements must be reported on an OSX or 2XX code and should not be filed on a SHRAE-PY transaction. 5XX codes should only be used for commission-awarded lump sum benefits or commission-awarded compromise settlements. Next, we have the SHRAE-QT. It must be filed 45 days from the end of the quarterly period. A quarterly period is every 90 days based on the month and day of injury, as long as medicals, indemnity, or award payments have been paid since the last SHRAE report. It cannot be used to introduce a new benefit and cannot be used to correct a previous SHRAE transaction. A SHRAE-02 must be filed to update SHRAE information unless otherwise noted on the element requirement table. Last, we have the SHRAE-NT. It must be filed immediately upon knowledge of the event and can be used by the claim administrator to respond to the Commission's EDI-specific request for EDI transactions in place of a written response. It should not be used to appeal a penalty order or response to other Commission requests. Duplicate JCNs and the consolidation process. First, we will discuss duplicate JCNs. They get created for two reasons. A paper submission from the claimant or their attorney is received before or close to the same time as the EDI submission from the claim administrator, or it passes the duplicate check. The duplicate check assists in reducing the volume of duplicate claims. It checks against the Social Security number first, then looks at the name and date of injury combo. It must be 100% matched for it to be caught. If it passes the duplicate check, the transaction will reject for duplicate batch transaction. What can be done to prevent the creation of duplicate JCNs? The duplicate check assists with a large volume of these, but capturing the JCN in your system and using it on your initial FROI and submitting FROIs timely will also assist in preventing duplicate JCNs. The consolidation process. Consolidations are performed when two JCNs are created for the same injury. The Commission determines which JCN to keep based on the creation date, was the FROI submission timely, and the activity that has occurred in each JCN, such as is it currently on the docket or has awards been entered. Once the decision is made, we move or vacate awards if needed. Issue the consolidation letter, which will advise of the correct JCN moving forward, and will request any EDI transactions if needed. One thing to remember is EDI transactions do not move from one JCN to the next. EDI transactions are JCN specific. Resources. Here is a list of our current training aids that can be found on our public website. The EDI department continues to assess and develop training aids as needed to be used by our claim administrators to assist with their Virginia EDI reporting. The next resource is the implementation guide. There is the element requirement table, which outlines what is required in Virginia, the event table that outlines when MTCs are due, the edit matrix, which outlines the acceptable values, error messages, population restrictions per data number, along with match data and sequencing requirements. And last is the FROI and SHRAE sequencing table. The training aids and the implementation guide can be found on our public website. On the left-hand side, go to the electronic data interchange under VWC departments, and the documents will be on the right-hand side under EDI documents and EDI training aids. Some additional resources we have are the EDI FAQs and the EDI training presentations. These resources can also be located on our EDI page on the right-hand side under EDI documents and EDI resources. Now let's talk about some challenges. Initial FROI rejects for duplicate. This means the claim already exists in our system, usually due to a submitted claim form, or we received EDI from another claim administrator. Reach out to the Commission's EDI department for the JCN by phone or email. Also, make sure if you receive the notification of injury request for FROI that you use the already assigned JCN. Multiple injuries on the same day. Submit the FROI for both injuries. The second injury will receive a rejection for sequencing error as designed. Reach out to EDI support to advise there are 2 injuries on the same day. The EDI team will review to manually accept and assign a JCN to the second injury. Once a JCN is assigned, the EDI team will reach back out to provide the new JCN. It is important to note that you may need to speak to your internal tech support department to manually TA the transaction in your system. Differences between the notification of address change. There is the notification of address change, request for FROI 02. This notification advises a change has been made to the claimant's mailing address by the Commission due to information received, and a FROI 02 is required to have it updated via EDI. The notification of address change is the notification only. It is issued to alert all parties that the claimant's address has been updated via EDI by the claim administrator. Future payment date and the benefit period through date. The Commission does not allow the reporting of future dates with the exception of a lump sum of PPD. This is the only time a filing can have a future payment and/or benefit period through date. Employer paid salary in lieu of compensation. When reporting employer paid benefits, the correct 2XX code should be reported for the benefit type paid. Code 240 for employer paid unspecified should only be used when the benefit type the employer paid is unknown. Next up is compliance. What is Virginia looking at? Items that can result in a fine or penalties such as JCNs created from a paper submission where a FROI has not been filed, an award has been entered but the SROI showing payment has not been filed, payments reflected as ongoing where a subsequent SROI has not been filed in the last 135 days, failure to file specific transactions based on a request such as correction required letters, and incorrectly submitted transactions which require a resubmission or the submission of other transactions to correct. We are also looking at items shown on the report cards, which include the timeliness of FROI transactions, the percentage of accepted versus rejected transactions, the overall company grade, the number of fines issued, all in comparison against all submitters. These are issued on a quarterly basis to the business contact and any additional contacts they have requested to receive it. The fine and penalty process. Each request gets 2 letters and 1 phone call or email. There are at least 41 days before a fine is issued, 51 days for failure to file FROI, and 10 additional days are given before the issue is referred to judicial for a possible show cause. These timeframes will likely vary as tasks are not necessarily worked the same day they are triggered and can be extended if needed based on responses received to our correspondences. We ask that our requests are not ignored if you disagree with them. Instead, please send something to us in writing on company letterhead or file a SROI NT, if applicable, to investigate or provide a reason why it is not necessary. This is the penalty order. It provides what letters were issued and the dates they were issued. The fine amount and the transaction must still be filed. If you contest the fine, sign it at the bottom and send it back. There is a second page to this and that also provides additional details to actions taken on the claim on our end to have the request complied with. How can you improve compliance? Use your resources and reach out to EDI support for assistance, file transactions timely, and respond to requests in writing on company letterhead or filing a SROI NT if you are unable to file the transaction in a given time or dispute a request. Report cards and trading partner information. Report cards are issued quarterly to the business contact and any additional contact requested as noted on the trading partner registration. Each trading partner will receive a report card that encompasses data for all claim administrators listed on their trading partner registration. Questions related to the trading partner registration process should be sent to editipinfo@workcomp.virginia.gov. Questions related to the report card should be sent to edi.support@workcomp.virginia.gov. It is important to note that we are unable to pull specific claim numbers where each grade was affected. If you view the last page of the report card document, you'll find the report card requirements that show our calculations, and our hope is that you can query your system to determine each affected claim number. Here is an overview of the contents of the report cards. The first page is going to provide the main sender name, the quarter the report is for, and the date the report is issued. The second page is a letter from EDI about what is in the report card. It also contains the claim administrator's reporting under the main sender, along with the grade scale. Page 3 provides your overall grade, which is the average of the acceptance grade and timely grade. Page 4 provides the acceptance grade for FROI and SHROI transactions. Page 5 provides the top 5 errors and the timely FROI grade. Page 6 provides the fine and penalty information. This shows fines for the quarter for both the individual sender and for all submitters, both in comparison with the date totals since January 1st, 2016, when we began issuing fines. The last 2 pages of the report card contains a small data dictionary, common abbreviations, and report card requirements. The report card requirements will assist when you want or need to query your own system to determine what claims affected your grades. It is the Commission's practice to recommend you do this prior to reaching out to us, as we are unable to accommodate most requests for assistance in locating the claims that made the impact. Other areas of interest for future phases of compliance are timeliness of transactions, rejections. Are the claim administrators following up on the rejected transactions? Fines and penalties for report card grades. Required meeting or training. This may encompass where a certain amount of fines have been issued to one company or for a company who maintains a low overall grade. The one thing to remember is the Commission will give a substantial amount of notice prior to issuing a fine or penalty in any of these areas. This concludes the training part of our session, but before we end the presentation, we have a couple more things. Additional training. Is there a need? If so, what topics should we cover? Also, do you have any recommendations for new training aids or recordings you would like to see available? All requests for training can be submitted to EDI support with the subject line EDI training. Here is the EDI support team's contact information, email, and phone. All written responses to EDI-related correspondences should be faxed or mailed. They can also be uploaded through web file directly into the claim. Please note that written responses cannot be accepted via email. This concludes the presentation. We would like to take a moment to thank you for reviewing this presentation and hope that it was beneficial and provide you the necessary information to ensure success in submitting EDI in Virginia.